Today is Friday, September 30th, and this is ADM Investor Services Weekly Market Wrap-Up. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or Archer Daniels Midland Company. Today's guests are Alan Bush, the Senior Financial Economist at ADMIS, and Greg Grow, who is the Director of Agribusiness at Archer Financial Services. Greg, let's start with the grain markets. Were there any surprises in today's USDA quarterly stocks report?
Kurt, the numbers came in pretty close to expectations. Although the wheat production number was higher than the average trade guess, it seems that the market fairly anticipated that. The corn stocks number right in line with estimates, maybe just a little bit lower than the average guess at 1.738 billion bushels. Soybean number was 197 million bushels here at the end of the marketing year, slightly under the average trade guess at 201.
How's the harvest progressing here in the U.S., and what do the yields look like thus far?
It's been kind of a up and down start. We've had a lot of moisture in certain parts of the Corn Belt. Harvest data is coming in pretty strong on beans so far. A lot of producers indicating yields coming in above expectations there. But in corn, it might be that the USDA is a little bit high on its September estimate. Corn yields a little bit more uneven and maybe I wouldn't say disappointing, but not exceeding last year in many cases.
Yes, this question. Are farmers coming to the market with crops, or is there still a propensity to store the grain? Do you think that the capacity to store is still healthy for farmers?
It feels like the market, the producer is using the soybean market right now. It's on a high ratio against corn. It feels like producers are very active selling soybeans right off the combine to take advantage of what is a very tight basis in many cases for beans. And producers seem to want to store the corn, hoping for a little bit of a better price down the road.
And finally, what are you expecting as we approach the October 12th crop production report?
Well, I think it's quite possible that the bean yield is going to go up. The recent USDA yield at about 49.6 should be, about 56, should be rising above 51 bushels to the acre. Some talk in the market of something in the area of 51 to 52. Is thought of, but I do think that it's quite possible that the USDA will again lower the corn yield as they did in the September report, perhaps a bushel or a bushel and a half.
And turning toward the financial markets, yesterday it was reported that the second quarter U.S. gross domestic product increased 1.4% on an annualized basis. This compares to expectations of a gain of 1.3%, not a big change there. This doesn't seem to be strong enough for the FOMC to hike its Fed fund rate anytime soon. What is your outlook for Fed policy now?
I think that the Fed will be very slow to raise rates, even though the consensus view now is that they will raise at the December meeting. In fact, there's a 57% chance, according to the financial futures markets, that they'll raise at that meeting in December. Our belief is that as long as other major central banks are in an easing mode, that it's going to be very difficult for the Fed to raise rates even in December, that they may wait until next year. So the GDP, it was, I would say, not the kind of GDP report that you would need to have the Fed be aggressively raising rates.
Looking at precious metals, the gold market's off its highs, topping at $1,377 in July. What is your present outlook for gold futures?
Now, gold received a bit of a bounce with the banking problems over the last couple of weeks in the Eurozone. Since then, though, in fact, we have seen the gold a bit lower today. Apparently, that situation being alleviated to some degree. But longer term, it's the inflation outlook that will dominate, and that will be the influence that takes all of the precious metals higher. In fact, I would expect new highs for the move possibly within the first quarter of next year. So we are in the very early stages of a bull market in precious metals. Any break should be used as a buying opportunity, especially in the gold around the 1305 to 1310 level. That is a major support in the December gold futures.
Let's turn to the equity markets briefly. The third quarter corporate earnings season officially begins on October 10th when Alcoa reports its profits. Right. Analysts are predicting that earnings for the S&P 500 companies will decline 1.5% or so. Will another quarter of declining corporate profits finally reverse the bull market in stock futures?
No, it will not. Basically, we have had quite a few quarters of negative growth in earnings But the rate of declining earnings is starting to slow. But I think what is more important than that is once again, the interest rate outlook, with interest rates remaining low globally and a Fed that is very likely to be slow to raise interest rates. That dominant influence should continue to support stock index futures, not just here in the U.S., but globally. Also, strangely enough, we have had comments from Fed Chair Yellen and also from Summers over the last few days, floating the idea of the possibility of the U.S. Actually buying equities if need be with some type of additional stimulus plan. Now, this is not something that is a near-term situation or there is a need for it near-term, but the possibility that the U.S. could be buying equities, as is being done currently by the Bank of Japan and the Swiss National Bank, should be viewed as a long-term supportive factor. So for a lot of reasons, we think stock index futures will continue to advance.
Yes, both of you, just throw a question out there. Is there any news on the energy front right now, short-term or long-term? I mean, is there any change in the energy markets?
Go ahead, Greg.
I think this week's news that the OPEC nations are going to attempt at some type of a cutback in production was enough to push some short covering in the market. The reality of them actually implementing something is down the road, and I think there's a lot of skepticism whether that'll really be achieved. Oil inventories are still historically very large.
Finally, what about predictions for the U.S. presidential election? Anything there, guys? Just putting you on the spot for a minute.
Well, obviously it's very close. Our feeling is no matter who wins, equities are headed higher.
I really don't have a lot of opinion. It's a very emotional and volatile time, and I think the election could have some impact on the psychology depending on how things end up in November.
Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services, Archer Financial Services, or Archer Daniels Midland Company. If you'd like more information about the brokerage services offered at ADMIS, or would like to open a trading account, please visit www.admis.com.